We've got another special video about how you can successfully grow your public adjusting firm. And we're going to get into it right now in 3, 2, 1. What's up, advocates? Welcome back to another episode of the Commercial Claims Show. I am your host, Vince Perri, owner and CEO of Elite Resolutions and Commercial Claims Advocate. And today I want to get back to our business building series. If you are the owner of a public adjusting firm, you are going to want to hear what we've got to say in all of these videos. We are doing pretty well at Elite Resolutions, and we've developed a very nice process, a very nice system to make us successful and to do everything that we need to do to properly grow the company. Now, we have one video that we talked about people, the importance of putting the right people in the right place. Listen up, advocates. Whether you're a public adjuster, contractor, or an attorney, if you have a client that has suffered any kind of catastrophic loss, whether that be by fire or storm or just any catastrophic loss that requires your client to have to move out and incur ALE and loss of use coverage, you need to think about looking at Black Diamond Services. This is an incredible idea for a service that I think is extremely valuable, and I've actually personally used for my clients myself. Basically, what they do is they provide all of the necessary money that is needed to be done for the homeowner to go and move to another place, whether that be a hotel or another home or whatever it is. They basically bill through their insurance policy's loss of use coverage, and basically they provide financial assistance so that the insured never has to incur any out-of-pocket expenses. It's an amazing service. I love the people at Black Diamond Services, especially Millie Varela. If you just contact her and contact Black Diamond Services, I'm telling you, they're going to take care of your clients like you wouldn't believe. I personally have a client who suffered a fire damage and had to use their ALE coverage, and all we did was refer them to Black Diamond. Our clients did not have to come out of pocket a single penny. Black Diamond provided all of the financial money, and they provided the actual location for the homeowner to stay. Amazing service. Contact Black Diamond Services today so you could find out more information for yourself. In this video, I want to talk about numbers. I really want to talk about the importance of keeping track of your numbers. We keep track of our numbers on a weekly basis, on a monthly basis, on a quarterly basis, on a yearly basis, and on a 3-year basis. We have goals and everything that we want to accomplish in the next 10 years, the next 3 years. And in order to get to those goals, you have to keep track of everything. You know, one thing I always say, I have a journal that I love. I use it all the time. It's the Best Self Journal. This is a great one, and this is really where I learned a lot of this stuff: is holding yourself accountable on a weekly basis, making sure you're doing everything you need to do, from spending quality time with your family, working out, signing claims, whatever it is, whatever your goals are that you want to get to in 3 months. You should be keeping track of those on a weekly basis, because if you're keeping track on a weekly, it helps you achieve your 3-month, and if you're achieving your 3-month, you're achieving your year goal, and if you're achieving your year goal, you're getting towards your 3-year and 10-year goal. So it's very important that you keep track of your numbers. The numbers that we keep track of here at Elite Resolutions on a weekly basis is, number one, claim sign. We have a goal that we want to get signed. For the last couple of years, we had an average amount that we settled. It was about $40,000 or $50,000 that we settled every single claim. So I know, based on that, how many claims we need to sign to get to where we want to get to with all the adjusters and their splits and so on and so forth. So we have a year. We start with the beginning of the year, and we set a goal for how many claims we want to sign throughout the year. And then we just divide it by 4, and that's our quarterly goal. And then we keep track of how many claims we signed every single week to get to our quarterly goal, which ultimately gets us to our year goal. So claim sign is the number one thing that we keep track of. The next thing is claims closed. Guys, I cannot stress to you the importance of making sure that you're closing claims. You could sign 1 million claims, but if they're not closing, that's a problem. That's where training gets involved, in making sure that you're training the guys to work the claims, to follow up, that you're training your admins. If you have a desk adjuster in your company, making sure that they're working the claims to close it. Closing is very, very important, because you don't get paid until the claim closes. So keeping track of how many claims you close is very important. If I were you, I'd go back to last year, or try to think of how many claims you should be closing. In my opinion, you should be closing at about a 50 to 70% rate. More than 50, around 70 seems like around normal. So if your goal is to sign 100 claims, you should be closing at least around 60 of those claims by the end of the quarter, by the end of the year, or whatever it is. It's not an easy feat, because you know how long these claims take to get paid. And I think it's a downfall of many roofing companies and many public adjusting firms that wait so long to get paid, and they can't continue going. So claim signed is great. And I know your sales guys and your PAs out there are going out there doing whatever they can to sign claims, networking, door knocking, whatever it is they do. But once the claim gets signed, it better get worked. It better get closed, because that is ultimately what's super important, is making sure you're keeping track of your claims closed. So we try to have it at a 70% clip. So if our goal is 100, we want to try to close 70. And it's great to keep track of it on a weekly basis, because you can see, do I need to improve our sales because we're not signing how many we need to be signing, and do we need to really get working on the closed claims? It could be also the check processing system, right? That's an issue that we ran into as well. If those checks aren't processing quickly enough, you're not following up with the client to work the mortgage company process and so on and so forth, that's also an issue. We do not consider it a closed claim until our money is in the account. That's when it's closed. So keep track of your claims closed. Another one we keep track of is settlement amounts, okay? Having a good number, if I want to get an idea of how much revenue we want to bring in, I know that we have to have a certain settlement amount. So if your average settlement amount for one claim is $50,000, if I want to make $1 million in revenue, well, you take $50,000, you multiply it by whatever your percentage is, let's call it 15%, and that'll give you $7,500. So you're making $7,500 on one claim. Now multiply that by your claim sign goal, and that'll get you your settlement amount. Okay, you see how this is all coming together? Actually, if you want to make a certain revenue based on that settlement amount, it might actually change your claim sign goal to go based on the revenue that you want to make. So settlement amounts is very important. Again, try to go back to last year and see what your average settlement amount was, and then try to multiply that by how many claims you want to sign or how much revenue you actually want to make. And that'll give you your settlement amount goal that you want for the entire year. Again, get the whole year, divide it by 4. Those are your quarterly. Every time a claim settles, again, for us, it's not until a claim is closed that we put in that settlement amount, and we put in how much that claim actually settled for. And every week we update it depending on what we settled that week. Next is probably my favorite, estimate amounts. The reason why it's my favorite, and this is the estimate that our public adjusters put together, that the PA firm puts together. This is very important because it depends on where you're at, right? In the state, in the country. If you're settling at 90% of your estimate, if you're settling at 100%, if you're settling at 70%, again, try to go back and see what your average was the previous year. In Florida, it's a little bit different. We've got some negotiating room in Florida, I would say, more than I would say in Texas. Texas is really, it's just a different beast. But think about how much you're settling your claims for. Ultimately, a lot of it's going to be negotiation. You may be willing to get rid of some line items and so on and so forth. But the reason why it's my favorite is because if you are not hitting your claim sign goals, but you're surpassing your estimate totals, then that can make you feel a little bit better as to how much you're going to end up with. So let's say you're settling at a 90%. I mean, I'd rather make it easier, but we're settling at a 90% clip. So, if you write $1 million in estimates, if you write $1 million, I'm literally putting it together on the calculator right now, but if you have $1 million in estimates and you're settling those claims at 90%, that's going to give you $900,000 in settlement amounts. If those are at 15% is what you're making, that's $135,000 in revenue. Again, now you multiply that by how much revenue you actually want to make, and that's how you sort of get that number that you want to get to. The most important thing is for you to understand the reason why keeping track of your estimate amounts is so important is because if your estimate amounts are through the roof, but you're not signing a lot of claims, that just means that you're signing larger losses, right? Which ultimately ends up better because it means more revenue. So that's why it's my favorite. The two most important numbers when we keep track of the adjusters is not just their claim signed, but is their estimate totals. We have one guy in our team who just signs. I mean, this guy's a machine signing claims all the time, but they're all lower claims. They're all just normal residential $30,000 to $50,000. And we had another adjuster who signed 2 large losses. In those 2 losses, it was just as much, if not more, than like the 50 losses that this other adjuster signed. So it sort of evens out. So if you're a large loss adjuster, you don't have to sign necessarily as many claims. But that's why the estimate total, so as soon as an estimate gets done by our estimator and we submit it to the insurance company, then we put it into our estimate totals and we keep track of that as well. The last thing that we keep track of is, of course, total revenue. We want to make sure we are hitting our revenue goals ultimately, and this will help us with all the dividing and all the multiplying and figure out how much we're actually settling for when the end of the year comes and we put all our numbers together from the previous year. Revenue total is very big. And let me tell you something for business owners, do not be afraid to share the revenue totals with your team. It's good for everybody to sort of be a part of the entire process and have an understanding of where the company is and how healthy the company is at the moment. We even share a lot of our profit and loss. I like for everybody to know if we're doing well, if we're not doing, or if we're not doing well. I think it's very good, again, to have the team cohesion, everybody sort of together, figuring it out together, everybody sort of being part of the race of what we're trying to do, and also everybody having a better understanding of how business works, right? I mean, I think the better people know how business works, the better they're going to be successful in the entire business. So I'm pretty open with a lot of the numbers in our company. And again, it's just a better way to really provide that family atmosphere that we're all in this together and we're not hiding anything. So, but if anything, revenue totals, it's just okay. Share that with your people. Share that with everybody. They understand that there's a lot of overhead and expenses that go on with running a business, but it gets everybody involved in the race to try to hit that revenue goal. So that's it, guys. That's what we've got. That's it. And we keep track of this stuff every single week. I'm literally, as I'm recording this, I'm looking at the scorecard. We call it a weekly scorecard that we have here of keeping track of our numbers. So first one is claims signed. Second one is claims closed. Third one is settlement amounts. Fourth one is estimate amounts. And last one, total revenue. Those are the 5 things that you guys should be keeping track of on a weekly basis. Again, get your year goal for those 5 numbers, divide it by 4 to get your quarterly goals, and then keep track of it on a weekly basis. It's going to be a great way to understand where you guys are strong, where you guys are weak, what you guys are doing well at, what you guys need to keep working on. Is it sales? Is it estimate amounts? Is it just overall settlement amounts? Maybe you're settling too low, right? Maybe you're settling at a 50%. That's bad. Then why are we writing such large estimates? So that's just it, right? Keeping track of your numbers is so important, not just in business, but in your personal life as well. Making sure that you're hitting your workout goals, making sure you're hitting your weight loss goals, making sure that you're hitting your time with your family goals, making sure that you're reading every day and you're hitting your goal to read as a certain amount of books, making sure that you're journaling every day, making sure that you're meditating every day. Keep track of this. The reason why I love the Best Self Journal so much is there is a section on it where I have my whole weekly goal as well, and I can keep track of that. So it's right here. You've got your habit. This one's a little bit empty, but you've got your week, Monday, Tuesday, Wednesday, Thursday of did I run that day? Did I write that day? Did I read that day? Did I sign a claim that day? And at the end of the week, what do? You total it up, hold yourself accountable. That's all the numbers is here, making sure you're holding the entire business and everybody involved in it accountable. That's it, guys. That's what we got. My name is Vince Perri, owner, CEO of Elite Resolutions. You can go to eliteresolutions.com to learn more about our public adjusting firm. And you could go on, and if you're interested in coming to work for us, we have applications that you could fill out if you want to just join the team. You can go on commercialclaimsadvocate.com to look at a lot of stuff. You can purchase this book that we have here, the Public Adjuster Manual. You can purchase our online course that we have as well, or you can attend one of our intense 2-day workshops along with our Advocates United meetups, which is really what separates us from a lot of others, is we have what I believe is the #1 industry meetup, #1 public adjuster and contractor meetup in the country. It's not a conference. It's like a mini conference, but it's a place you're going to get education. It's a place you're going to meet some really, really cool people, and it's a place you're going to have a good time, meet me, and have some good conversations and some good talks. So that's all we got, guys. I hope you enjoyed the show on our business building series. I think you're going to get a lot out of that, and I hope you could implement it into your business today. But that's all we got. Thank you very much. Have a great week. Peace out.